On February 12, 2026, something shocking leaked out of Moscow. A private Kremlin memo, never meant for public eyes, landed in the hands of Bloomberg. And what it revealed stunned the entire financial world. The country that spent years shouting that the US dollar was finished is now secretly trying to crawl back into the dollar system. Not only that, Russia is offering a massive $12 trillion economic deal just for one thing: access to America's currency again. And if you own silver or gold, this changes everything. For the past few years, investors have been sold one powerful idea. The US dollar is losing control. The world is shifting away from America's financial system. Countries like Russia and China are building a future without dollars. BRICS nations, people said, were preparing a new global currency, and if that happened, gold and silver would become the ultimate winners. That story spread everywhere. It fueled a massive wave of excitement in the precious metals world. Central banks began buying gold at record levels. Silver surged higher than most people thought possible. The logic seemed simple. If the dollar falls, metals rise. But then reality hit. Silver suddenly crashed. Gold dropped sharply. Investors who believed the de-dollarization narrative were left confused and frustrated. If the dollar was truly dying, why were metals collapsing instead of soaring? The answer is that markets don't move based on slogans. They move based on hidden pressure beneath the surface. And while Russia was loudly claiming independence from the dollar, the truth inside Russia was far more fragile. When Russia was cut off from SWIFT and sanctioned in 2022, it turned toward China. Trade shifted into yuan and rubles almost overnight. Putin proudly announced that nearly all business with China was now done without touching the dollar. On paper, it looked like freedom. But in practice, Russia discovered a harsh truth. The yuan is not the dollar. The dollar is global. It's liquid. It works everywhere, instantly. The yuan is tightly controlled and far less flexible. Russian companies struggled to access enough yuan to pay suppliers. Payments that once cleared in hours began taking weeks. Chinese banks became cautious, fearing U.S. sanctions. Russia was forced to sell oil at steep discounts because China knew Moscow had no other options. Instead of escaping dependence, Russia simply replaced one master with another. And as China tightened its grip, Russia's economy began to strain under inflation, slowing growth, and massive war spending. The dream of abandoning the dollar started to look less like strength and more like desperation. That's the real problem most investors missed. De-dollarization sounds powerful in speeches, but living without the dollar is far more painful than the headlines admit. Now here's where this story takes a turn that almost nobody saw coming. Because by early 2026, Russia had reached a point of desperation. The country that spent years declaring the dollar was finished was quietly running out of options. Inflation was climbing, economic growth was collapsing, war spending was swallowing the national budget, and China, the partner Russia depended on, was squeezing them harder with every passing month. Behind the scenes, Russia wasn't winning the financial war. It was slowly being cornered. And that's when something shocking happened. Instead of doubling down on de-dollarization, Russia made a move that stunned global markets. They didn't announce it on television. They didn't brag about it at a summit. They did it quietly, behind closed doors. Russia picked up the phone and called Washington, not to threaten, not to boast, but to negotiate. And what they offered was almost unbelievable. A massive economic proposal worth an estimated $12 trillion, oil and gas partnerships, Arctic drilling rights, nuclear cooperation, artificial intelligence development, strategic mining deals for lithium, platinum, copper, and nickel, the exact resources that power modern technology and military strength. Russia was essentially saying, let us back into the dollar system, and we'll open up everything. Think about the irony. The loudest voice against the US dollar was now asking for access to it again. And the market understood immediately what this could mean. Returns to dollar-based trade, demand for dollars increases. A stronger dollar often pressures gold and silver, and that is exactly why metals began reacting violently. Silver fell fast. Gold pulled back sharply. Estor suddenly realized that the de-dollarization narrative, the emotional fuel behind the metals rally, was cracking. But here's the twist most people are missing. This isn't just a story about currencies or politics. This is about what happens when a nation discovers the hard truth. The dollar isn't easy to replace. The financial system America built still controls global trade, global banking, and global energy. And if even Russia can't escape it, what does that mean for the future of gold and silver? Is this crash the end of the precious metals bull run? Or is it the setup for something even bigger? Because the next part of this story reveals what governments are doing privately, while the public is distracted by headlines. And what comes next may shock every silver investor watching. To really understand why this leaked Kremlin memo matters, we need to rewind to the moment this entire financial earthquake began. February 2022. Russia invades Ukraine, and within days, the West responds with something far more powerful than bullets or missiles: money. The United States and Europe launched the most aggressive financial sanctions in modern history. Russia is kicked out of SWIFT, the global banking network that moves trillions of dollars every day. Russian banks are cut off from international transactions. Hundreds of billions in Russian central bank reserves are frozen inside European accounts. The message was brutal and unmistakable. You're done. No more dollars, no more access. Figure it out. At the time, most analysts believed Russia would collapse. Without the dollar system, the Russian economy was supposed to suffocate. Their currency would crumble. Their trade would die. Their government would break under pressure. But something unexpected happened. Russia didn't collapse. Instead, Russia pivoted east. They turned to China. Almost overnight, Moscow began building an alternative financial pipeline. Trade that once moved through dollars and euros was redirected into yuan and rubles. Russian oil was shipped east instead of west. Chinese companies became Russia's new lifeline. By late 2024, Putin stood confidently in front of cameras and announced that nearly 90% of trade between Russia and China was now happening without the US dollar. By 2025, that number reached over 99%. To the world, it looked like a revolution. Russia became the face of the de-dollarization movement. At BRICS summits, Putin spoke as if the dollar era was ending. He even held up a symbolic prototype of a new BRICS banknote, sending a loud message: the future will not belong to America's currency. And investors in gold and silver loved it. The logic felt unstoppable. If countries were abandoning the dollar, they would need a new place to store wealth. Gold would rise. Silver would explode. Central banks began buying record amounts of gold. Precious metals surged to historic highs. Gold raced upward. Silver rocketed. It felt like the beginning of a new monetary age. But while the world watched the speeches, something darker was unfolding inside Russia. Because abandoning the dollar is easy in theory, and extremely painful in reality. When Russia switched into yuan-based trade, they discovered something critical. The yuan is not the dollar. The dollar is liquid everywhere. It is accepted globally. It can be converted instantly into almost anything. It powers energy markets, banking systems, and international trade. The yuan doesn't work like that. The yuan is tightly controlled by Beijing. It does not flow freely across the world. And most importantly, it does not have the deep liquidity that global commerce requires. By September 2024, Russian banks hit a nightmare scenario. Russian businesses needed yuan to pay Chinese suppliers. But yuan liquidity inside Russia was suddenly scarce. The overnight borrowing rate for yuan in Moscow exploded past 200%. 200%. That wasn't a typo. It was financial panic. Companies couldn't access the currency they needed to function. Payments that once cleared in a day began taking weeks. Some transactions stretched to nearly 3 weeks, paralyzing importers and exporters. And then came the real betrayal. Major Chinese banks began quietly refusing Russian transactions, terrified of being hit by secondary U.S. sanctions. Institutions like Ping An Bank and Bank of Ningbo slowed or stopped processing Russian payments altogether. Russia realized they were trapped. China was their only major financial partner left. And when you only have one option, that option controls the price. China forced Russia to sell oil at massive discounts, sometimes nearly 30% below global market rates. They demanded cheap natural gas contracts. They leveraged Russia's desperation at every negotiation table. Then, in early 2026, China suddenly stopped buying Russian electricity. No warning, no discussion, just a cold message. Oh, your prices are too high. We're done. Russia had no backup customer, no alternative market, no leverage. The dream of independence had become dependence. And inside Russia, the economic pressure was building. Growth that looked strong in 2024 was fueled almost entirely by war spending. But by late 2025, that growth collapsed sharply. Inflation was surging far above official numbers. Interest rates climbed to crushing levels. Businesses outside the military sector began shrinking. Oil revenues dropped below expectations. Global crude prices were weakening, and Russia was forced to sell at discounts on top of that. The national budget was being consumed by war. Civilian industries were suffocating. The economy wasn't collapsing overnight, but it was rotting from the inside. And Russia's leaders knew it. So in early 2026, Moscow made a move that stunned the world. They quietly opened negotiations with Washington, not publicly, not with speeches, behind closed doors. The man leading the effort was Kirill Dmitriev, head of Russia's sovereign wealth fund and one of Putin's most trusted financial operators. Across the table sat U.S. representatives connected to Trump's administration, and what they discussed became known as the Dmitriev package, a proposal so massive it sounded almost unreal, roughly $12 trillion in economic cooperation. To put that in perspective, Russia's entire economy produces less than $3 trillion annually. This deal was several times larger than their GDP. Bloomberg later obtained the leaked memo, 7 major proposals. Russia wanted to return to using the US dollar for energy transactions. The same nation that declared war on the dollar now wanted back inside the dollar system. They also offered long-term contracts to purchase American aircraft. Desperate after sanctions destroyed their aviation supply chain, they proposed joint oil and gas projects in Siberia and the Arctic, offering America access to some of the largest untapped reserves on Earth. They suggested nuclear energy cooperation, mining partnerships for lithium, platinum, and copper, and even joint development in artificial intelligence. Russia was basically saying, let us back in, and we will open everything. And perhaps the most shocking detail, the memo hinted that the $300 billion of frozen Russian reserves could become part of the signing bonus. Western officials described this proposals as something else entirely, an attempt to split America away from Europe. If Russia and America became energy partners, European sanctions could weaken, alliances could shift, global power structures could realign. On February 13th, Russia confirmed the discussions. This wasn't speculation anymore, it was real. And in that moment, the entire de-dollarization narrative cracked. Because Russia's retreat proved something markets rarely admit. The dollar is not just a currency, it is the system. And even the loudest opponents of that system eventually discover escaping it is far harder than anyone imagines. So what does all of this actually mean for gold and silver? This is the question every investor has been asking since the moment that leaked Kremlin memo hit the headlines. Because when Russia, the loudest voice against the dollar, suddenly starts negotiating to return to the dollar system, it forces the entire precious metals narrative to shift. And the market reacted instantly. Silver dropped hard. Gold pulled back sharply. Traders saw the headline and made the simplest conclusion possible. Russia returning to the dollar means a stronger dollar, and a stronger dollar is usually bad for metals. In the short term, that reaction makes sense. When demand for dollars rises, the dollar strengthens. And historically, gold and silver often struggle when the dollar is rising because it becomes more expensive for foreign buyers to purchase metals. On top of that, the emotional fuel behind the metals rally, the idea that BRICS would destroy the dollar, suddenly looked weaker. If Russia itself is crawling back to the dollar, then de-dollarization was never as unstoppable as people believed. So, yes, in the short run, the story creates pressure, more volatility, more sharp pullbacks, more scary headlines designed to shake out weak hands. But here's the deeper truth. This memo does not change the fundamentals of precious metals at all. Silver had already suffered a brutal correction. A drop from triple-digit highs down into the $60, $70 range is not normal weakness. It is blood in the streets territory. That's the kind of move that resets sentiment completely. And after resets like that, the real opportunity often begins. Because no Kremlin memo changes the hard math of silver. Silver is in a structural supply deficit. The world consumes well over 1 billion ounces per year, but production continues to fall short by hundreds of millions of ounces. That gap compounds annually. More silver is being used than is being mined year after year. That reality doesn't care about geopolitics. Silver is not just a money metal, it is an industrial necessity. It powers solar panels, electric vehicles, 5G infrastructure, medical equipment, advanced electronics, and military technology. Every electric car requires significant silver. Every solar panel adds more demand. And the world is building more of these systems, not less. Demand is accelerating. Supply is tightening. That is the foundation. And here's something most investors miss. Physical silver is becoming harder to source. Vault inventories have been declining. The difference between paper silver prices and the cost of real physical metal is widening. When paper markets say one price, but physical markets feel another, it's a sign that the system is under strain. Eventually, physical demand wins. Now consider what governments are doing. Central banks continue buying gold aggressively at record pace. China has accumulated gold for months on end. India has been stacking enormous amounts of silver. Even Russia, while negotiating for dollars, has quietly begun adding silver into strategic reserves. That tells you everything. Governments want dollars for trade because the dollar system is still global, but they want metals for insurance because dollars can be frozen, sanctioned, weaponized. Gold and silver cannot. Russia's situation proves that the dollar is still dominant, but it also proves why nations will never fully trust it. Every country watched the West freeze $300 billion overnight. Every leader saw how quickly access can disappear. That fear is exactly why gold remains a central bank asset. That fear is exactly why silver remains a long-term hedge. So the real reveal is this. Russia returning to the dollar does not kill the metals bull case. It confirms the reason metals exist. Short-term noise may shake prices, but long-term fundamentals, debt, deficits, supply shortages, industrial demand, and global distrust are still pointing higher. And that's why crashes like this often become opportunities. not endings. Now let me ask you something honestly. If Russia, the loudest anti-dollar voice on earth, couldn't escape the dollar, what does that tell you about the future? It tells you the dollar system isn't collapsing tomorrow, but it also tells you something darker. The dollar is a tool of control, and every country watching this knows it. That's why gold keeps rising long term. That's why silver deficits matter. That's why physical metal remains the ultimate insurance. So where does that leave you? If you're holding silver, you've survived one of the nastiest corrections in decades. The easy money phase is over. Now comes the patient phase. This is where weak hands panic, and smart money accumulates quietly. I'm not saying volatility is gone, but I am saying fundamentals haven't changed, and history rewards those who stay calm. So tell me below, are you buying this dip or waiting for lower prices? Drop your thoughts. I read every comment, because here's the final twist. Russia running back to the dollar doesn't prove the dollar is eternal. It proves the dollar is dangerous. Every nation just witnessed $300 billion frozen overnight. Every leader saw how quickly SWIFT can be weaponized. And once you see that, you never forget it. So yes, Russia may return to dollar trade, but the rest of the world will continue building insurance, gold, silver, real assets outside the system. This crash may feel like the end, but corrections are often the setup for the next explosive move. Silver's supply deficit is worsening. Industrial demand is accelerating. Mining output is tightening, and governments are quietly stacking metal while headlines scare retail investors out. That's how this game works. The dollar won this battle. But the war for the future of money is far from over, and the only assets no central bank can print are still gold and silver. So stay alert, stay patient, and remember, the biggest opportunities often arrive disguised as fear. This is the hidden economy, and what happens next will shock most people.